Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because for weeks now we've been saying that Bitcoin's bull market structure was still intact even with all of the macro madness we've been experiencing. And we kept saying that it was unlikely the cycle was over and that patience pays in this market. And even though sentiment was extremely fearful and most investors thought we were entering a bear market and the narratives were incredibly bearish and concerning, we knew that this is what happens at every single Bitcoin local bottom. The market is extremely fearful, and there's always a narrative that stops investors from buying and instead makes them sell so that they could buy back in a lot lower. A few weeks ago, the tariff experts were telling us that this was the end of the global world order as we know it and that Bitcoin was heading to at least 40,000. In August of 2024, the Japanese yen carry trade experts were telling us that the dollar and Japanese yen carry trade was imploding and we're going to enter a global recession, sending Bitcoin a lot lower. In September of 2023, the SEC was going after Coinbase and Binance, and many investors sold thinking this industry was done for. And of course, in November of 2022, when FTX went under, many investors sold because they thought this industry was done for and they wanted to buy back in at 10K per Bitcoin or 5K per Bitcoin. But instead of adding to all of that fear, we just kept it very simple and said that Bitcoin's bull market structure was still intact as long as it was holding its 50-week moving average, because that has been the line in the sand in previous cycles. And once you start seeing closes below that key moving average, you can start talking about the cycle being over, bear markets, and lower price targets. Not to mention, we were still holding above our March high and maintaining that macro higher high, higher low structure. And this is exactly why I called Monday's free weekly report the wall of worry. It's always the most uncertain and the most fearful at local bottoms. This is what I wrote about 2 weeks ago when I talked about what I was doing with my portfolio. I was deploying some cash at the lows, and although I had no idea if it was the exact bottom at the time on April 7th, I couldn't help but feel optimistic, buying extreme fear in this market climate. And now just 2 weeks later, I'm just sitting on my hands and not making any changes to my portfolio this week because my system is not calling for any rebalancing. And we already did the hard job of buying when everybody was panic selling. And now all we have to do is sit on our hands and see what the market does going forward. And if you're interested in learning about my portfolio system, I'm leaving early bird pricing open for another week with lifetime access. I promised I would give a warning once the modules were done, and now that they're completely finished, I'll leave this open for another week if you're interested in learning about my portfolio management system in a more organized and structured way. But as we look forward, I remain incredibly optimistic on Bitcoin. While everybody is arguing over the lag Bitcoin has with global liquidity and whether it's 75 days or 85 days or precisely 108 days is what shows the highest correlation, we've just focused on the big picture that Bitcoin tends to follow global liquidity. Sometimes it does it a little bit quicker, sometimes it takes a little bit longer, but with the huge uptrend we've seen in global liquidity over the past few months, I do expect Bitcoin to follow through, especially when we zoom out and notice that global liquidity is breaking out of a 3-year consolidation, and the past 2 times global liquidity broke out and made new highs, it sent Bitcoin on a parabolic rally. I don't think this rally will be as big as the previous 2 because Bitcoin is a larger asset and diminishing returns are a thing, but I have a very hard time being bearish on Bitcoin here, at least from a macro perspective, with global liquidity increasing the way that it is. And now we know a lot of this global liquidity move is driven by the weakness in the US dollar index. And as always, there's always a narrative. Right now, the narrative is that this is actually bearish because investors are fleeing US dollars and selling US assets. But all I know is that every single time the US dollar index has broken below the $100 level, Bitcoin went on a parabolic run, and it's doing the same thing here once again. So until the market says otherwise, I believe that the US dollar index going down and entering this risk on region should be bullish for Bitcoin and other risk assets, especially because Bitcoin doesn't have to worry about economic trade policy or tariff concerns because it is digital and global. And with the Fed rate cuts we're seeing priced in, right now the market is pricing in 4 rate cuts this year, but I expect this number to further increase, which should put even more downward pressure on the US dollar index because inflation has been falling off a cliff, and our leading indicator, Truflation, says that inflation is going to continue heading lower. We're also seeing more weakness in the labor market, which should give the Fed more room to cut rates as well. And we're seeing quite a bit of sell-off and deflation in asset prices across traditional markets, which should give the Fed more reason to ease policy and not keep rates as high as they are. And Bitcoin's price action over the past few weeks is even more impressive when you take into account what the S&P 500 has been doing in the meantime. A lot of people were convinced that a Bitcoin crash was right around the corner, but we instead focused on the data in front of us and noticed that Bitcoin was doing something that it hasn't really done historically. And a lot of that is driven by the fact that Bitcoin is correlating less with the NASDAQ and tech stocks and is trading a little bit more like gold during all of this tariff uncertainty. Here's the correlation between Bitcoin and the NASDAQ over the past few years. They have been rallying together and correcting together along the way, but recently Bitcoin has been holding up quite well while the NASDAQ has been selling off aggressively, and it does look like Bitcoin's price action is starting to be a little bit more similar to what we've been seeing with gold with about a 100-day lag. So whenever gold goes on a major rally and then calms down, Bitcoin follows and puts in its move. We've seen gold putting in an incredible rally over the past few months because of the concerns of currency debasement and the US dollar being replaced as the reserve currency of the world. And I do think that Bitcoin also benefits from some of those narratives. It's just a little bit newer and less established, so it tends to not move until a little bit of that uncertainty clears up and investors feel a little bit more confident buying Bitcoin. But as of right now, we are seeing early signs of a range breakout, and we know Bitcoin loves to chop around in these trading ranges. When we saw the false breakdown 2 weeks ago, we said retesting the range high was the highest likelihood scenario because so many shorts got trapped on that false breakdown. But we're going to have to wait for the weekly close to see if we actually confirm this breakout or it ends up being a false breakout like some of the ones we saw at the range highs in December and January. But I do like the fact that we're seeing a lot of accumulation from Bitcoin whales. You can see that very clearly here in the Bitcoin whale position change. While retail was panic selling so they can buy lower, we've been talking about whale accumulation for weeks now. We're also seeing in the strategy filings that about 13,000 institutions have Bitcoin exposure through MicroStrategy, or now called Strategy. And we're finally seeing some life coming back into these ETFs after almost no buying over the past few weeks. We're seeing a lot of investors now piling in and chasing this rally. This usually means that we're going to have some chop and consolidation now that so many people have FOMO'd back into the market. But it is nice to see that we saw over $900 million in inflows as investor sentiment is starting to recover. And this is what we see every single time. Nobody wants to buy when the market is down, but everybody piles in once it starts rallying again and all of the narratives start to flip to a more bullish and optimistic view. So we'll see what happens. We did some decent dip buying in the fair value region, but I'm gonna switch to more of a profit-taking mindset in the expensive areas. As of right now, Bitcoin is right in between the fair value and expensive region based on its extension from the 200-week moving average, but we'll see how this weekly candle closes. And if it does continue rallying here, we can be happy that we did take some advantage of this dip when we had the opportunity. It's also nice to see that Bitcoin is back among the 5 largest assets globally, surpassing Google, Silver, and Amazon, and investors do pay attention to this. This is quite a valuable headline that Bitcoin is this established and this large of an asset in terms of market cap. It's only behind Nvidia, Microsoft, Apple, and gold. Of course, gold is very far away, but I wouldn't be surprised if we flipped Nvidia, Microsoft, and Apple this cycle. depending on how much more time we still have. We did also get a new SEC chair sworn in this week, Paul Atkins. Now, I don't know that much about this individual, but compared to Gary Gensler and the previous administration, the bar to surpass is quite low here. And we have a lot of ETFs in the pipeline, about 70 US crypto ETFs awaiting an SEC decision this year. So I'm expecting a ton of products to go live, which should hopefully bring back some investor demand. But we are seeing some decent price action from Ethereum with that false breakdown above its previous range mid, which has now been reclaimed. Similar thing for Solana, made everybody capitulate and panic sell on that retest of the 200-week moving average, and we have now reclaimed that range low. We said that the range mid was the first target and the range high would be the second target, but of course a lot of that is going to depend on what Bitcoin decides to do. And after this recent price action, we're back to Bitcoin outperforming the S&P 500 and NASDAQ by about 5x on a yearly rolling basis, which is quite impressive given what we've seen over the past few weeks. Solana is trying to get back to break even, and Ethereum is still 45% down from where it was a year ago, which is quite painful. But a lot of the price action from Ethereum and Solana going forward is gonna depend on what Bitcoin does. I wouldn't be surprised if we saw some more chop here and some more reaccumulation before breaking higher, but we're gonna have to see where the weekly candle ends up closing and how this candle ends up looking before jumping to any conclusions. But as we look forward, the federal government is still running huge deficits, and that trend continues to worsen and doesn't seem to be turning around anytime soon. If anything, it seems like Doge is starting to back off with all of the pushback they've been receiving, and exponential debt growth usually means exponential money supply growth as well, which greatly devalues and debases the fiat currency, and that should put upward pressure on risk assets like the S&P 500 and fixed supply risk assets like Bitcoin that we price in those devaluing currencies. But as always, we'll continue monitoring the price action and data. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.